Hello, and welcome to the Crypto Beat. My name is Kelvin Sparks, and this is my co-host Tim Copeland, head of growth at The Block. Joining us today, we have Mason Nystrom, an investor at Pantera Capital. Welcome to the show, Mason. How's it going?
Doing well. Thanks for having me, guys. This is going to be fun.
Yeah, absolutely. And before we get started, just want to make a quick note that our Crypto IQ test is now live. Go to theblock.co/cryptoiq to take the test, showcase your smarts, and complete for 20K. On a separate note, if you're tracking the crypto treasury trade, we have some fantastic charts on our data dashboard. Make sure to check them out. Lastly, nothing on this podcast is investment or financial advice of any kind. Pantera may hold assets discussed, and investing in crypto is risky, so please do your own research. Now on to today's episode with Mason. So, sorry, I know that was a lot, Mason, but I watched a few podcasts of yours, and I felt like you talked a lot about your professional background in crypto, but never really talked about what was the first thing that got you interested from a personal level.
Yeah, I would say I did not grow up as like a technologist. I wasn't like the person, trying out all new technology. But when I first found out Bitcoin in college, I was mildly interested in it, kind of like threw it away. And then once 2017, kind of the ICO wave, came to market, I thought it was pretty fascinating that you could invest in any asset around the world. At that time without like KYC. And so that kind of just like was like an aha moment for me and got me really interested more personally from just like a financial perspective. And then as I started going deeper, as people do, you get really excited about what can be enabled by Ethereum in those days. And obviously we've come a long way since then.
Nice. And so, did any of the academic pursuits, like in college or whatnot, interest you at all? Or
Yeah, I mean, so in college, I worked in a sports performance kinesiology laboratory. As part of that, I did some like assistance in a more like academic nature. I would say I knew that academia was not going to be for me, but I always appreciated like the rigor and analysis of which you could approach a topic. Back then it was more about like designing studies. We would research like creatine and fish oil and stuff like that. So I'd say that drove an interest in research, but not necessarily an interest in crypto yet at that time.
that's cool. So then, I guess you went on to be a researcher at Masari, an investor at Variant, and now an investor at Pantera. So, I guess, like, what were the biggest differences in that career progression moving from research to investing?
Yeah, there's a lot of similarities between the roles, which is I think why a lot of people who are research analysts at companies like Masari end up going into investing. I think some of the core differences are really the depth at which you can do research at a role like Masari is much higher. I think sometimes as a venture investor in particular, you have to make more decisions with limited information. Generally speaking, as a research analyst, you're also covering assets that have more information, more data. You can go to Dune and find out like the more standard metrics. As a venture investor at the earliest stages, you're more so indexing on the team, the market, any product if it's live, and so I think those are just like the key differences. But I still think it's like great. It was great training to eventually move into investing.
Understood. Thank you for the context. Now, I guess moving into today's episode, and one of the core focuses, stablecoins, the $1 trillion opportunity. You wrote about this a lot in your blog, so I'm curious if you give us the quick summary. What is this $1 trillion opportunity? Why is it so important? And then maybe get into some of the people building in the stablecoin space.
Yeah, the TLDR is payments is one of the largest TAMs that exists. I think if you look at something like Stripe, which is $100 billion company, they do about 1% of payment GDP, and so when you look at the sheer opportunity that exists before us, there is going to be dozens of unicorns and deca-billion dollar companies and probably like centi-billion dollar companies that are created. I think ultimately payments touches so many facets of what we do, from remittances to treasury management to just like B2B import export payments, and each of those are going to have massive opportunities. And so what I think I personally see over the coming decade is stablecoins are going to be the technology in which we can kind of repurpose and reinvent a lot of existing like fintech rails to be more, internet blockchain native. And so that opportunity is been obviously massive in the traditional fintech world today. I think it's going to continue to be quite large moving forward. And so I think there's opportunities across the entire stablecoin stack, from distribution at the application layer all the way down to the issuance layer with companies like Circle or M0. And then there's layers in between that for liquidity as well as orchestration. Orchestration might be like a bridge or BVNK. Like, how do you actually move those dollars across?
Yeah, so one of the things I think that was interesting news that came out specifically with stablecoins was the Paradigm announcement that they are going to be building Tempo. So what did you make of it? What's going on there? And just get people maybe not be in the know up to speed.
Yeah, so Paradigm and Stripe announced that they're going to be building Tempo, which is a EVM focused layer one blockchain. And I'd say like there's still a lot of open questions around it. The idea is that it will start as a distributed but more permissioned validator set that will eventually have the goal of becoming a permissionless network. And I think it has a lot of implications for how we think about valuing blockchains, for how we think about the role of Ethereum or Solana in the landscape. I think a lot of people are sleeping on it. I saw a lot of takes on the timeline that were cope around like, oh, why would Stripe do this? Why wouldn't they just build an L2 on Ethereum, or why wouldn't they just build on Solana? And I think ultimately you have to realize that Stripe's incentive, because they control the distribution, the payment volume, is to maximize for their growth and for their economics. And so starting a layer one blockchain makes a ton of sense. They already, if you look at it, Stripe in terms of like a sheer total payment volume perspective, they do about 10 to 20% of the total payment volume that Ethereum does, and their payment volume quality is arguably higher just because it's like people paying each other. It's not necessarily like simple stablecoin transfers. And so their incentives are clearly there. It's a massive opportunity, and I think it just further goes to show what how important distribution and owning the end user or developer is.
Yeah.
So I can see why this obviously makes a lot of sense for Paradigm and Stripe. Closely connected companies, they can make a lot of money out of this if they provide a really good use case. I was curious, from the angle of the sort of retail investor, are there going to be opportunities there, do you think? Like, let's say if we take like Ethereum or Solana, obviously there's been sort of millions of opportunities from NFTs, DeFi, buying different tokens, speculating on meme coins, all sorts of jazz. When we're talking about like a sort of stable coin dedicated network that's going to be set up to help like regulated businesses process payments, are we going to see the same sort of evolution of like meme coins or like speculative tokens on this sort of a network, or do you think it would have fewer opportunities?
I think that if the network is truly permissionless, there will be someone's incentive to come launch those more speculative opportunities on the chain. Now, I think that Stripe is probably going to be pretty focused on verticalization. I think Zach from Bridge even kind of recently said in a podcast about Tempo that their goal is for it to be more of a payments chain, so they can eliminate the noisy neighbor problem, which is when meme coin activity is going wild on Solana, and so sending a stable coin transaction takes a bit longer. And so I think their goal is to build a pretty verticalized payment focused chain. But once it is permissionless, I think you could start to get the more quote unquote like speculative aspects. Now, if you think of like why would that happen, it's because liquidity is going to breed a lot of opportunities on that chain, and obviously developers and users will come to take advantage of that.
So I guess.
Yeah.
Sorry, go ahead, Tim. All you.
Sure. Basically, I think I saw someone comment about this on Twitter. But if what they're trying to do is create a chain that other payment providers, other sort of competing companies can use, do you think those companies will use a chain that's ultimately sort of, created and at least initially controlled by Stripe? Or do you think they might be like, we got to build our own thing, we got to work on something else? Like, you know, typically like competitors don't use other competitors' sort of rails. So I was curious, like, do you think they'll get their vision of being like a neutral playground for everyone else, or do you think they will be just the sort of main ones using their own chain?
I mean, I think they will be able to easily port all of their existing payments volumes onto their chain. Now, I don't think someone like a MasterCard or a Visa has an incentive to use Stripe Chain. That said, though, like that is, I think, clearly the opportunity that Stripe sees and where they're going is to create a larger consortium network that can move beyond just maybe who uses Stripe and extend to just more general payment volume. And so I think that's definitely the opportunity set. I think, Tim, what you're making the case for is like why you would use something like Ethereum or Solana, because you want that credible neutrality. You don't want to use a competitor's chain. And so I think it'll be interesting to see how some of the larger businesses think about it. But I also would wager that it's probably not a winner take all. There can be multiple payments chains in the same way that there's multiple payments networks around the world.
Yeah, and one thing that really stands out to me, I don't know if I have a question here, but it's the notion of blockchains being a like a point of competition amongst companies. Like I noticed this, so I had I did a event, moderated a panel which had a Paradigm researcher on there who talked about how, you know, these networks can capture the payment flow for stable coins and things like that. And you had MasterCard on the panel saying how much they're getting into stable coins. And you're definitely seeing as a big competition between sort of payment companies. But I was curious because up until now, we haven't really seen sort of big mainstream companies sort of say, we're doing all of this on the blockchain and that's how we're better than our competitors. Like, do you think we're going to start seeing that now, where you have companies saying, you know, we're using this technology and that's why we're better than you, we're making more money than you, or, you know, we're saving money? Will we start to see that more and more now and actually see like blockchains really find real world use cases with sort of traditional existing businesses?
I mean, if we're talking about payments, I think I would argue that it's already happening. Like there's already, you know, tens of billions of dollars in remittances happening on chain. There's billions of dollars in like import-export flows happening on chain. But the companies that provide those services aren't saying we're better because we're built on a blockchain. They're saying, hey, we can give you instant settlement. We can, you know, give you lower costs, better FX rates. And so it's really, I think, the value, selling the value proposition as we look towards maybe the future of building on blockchains and applications that are built on top of them. It's going to be less about having blockchain, in my opinion, be front and center and, oh, you should use this because it's a blockchain, and about using the application because it's selling something that's valuable to the end customer. So yeah, I think it's happening. There will of course always be the things that are like front and center, where blockchain is maybe the like product in the more like financial application aspects, but in general, I think we're moving to a world where blockchain is just this enabling rails, and it doesn't really have to be part of the marketing proposition.
Nice. I actually did have one last question, but if we keep it brief, because I do actually want to talk about the Hyperliquid USDH bidding war. But last piece on the Tempo news is, why would like a payments giant like Stripe cut into their like almost moat that they already have established in Web 2 and that like within that walled garden? So moving that on chain would actually like hurt their revenue, it seems like. So kind of curious why a company would do that.
Yeah, I mean, this is the age-old reason, you know, why disruptors often beat incumbents is because incumbents are typically afraid to reinvent their existing business model because it's typically maybe cannibalistic to margins. I give Stripe a lot of credit for making the jump. I think they've been incredibly savvy on the acquisition front with Bridge and Privy. You know, they, I believe, see where the puck is going, and they're trying to be out in front of it. which I think is a really brilliant move. I'd be curious, what are your all quick takes on Tempo and Stripe?
I tend to be a credible neutrality, like Maxi. So I really just love Ethereum. I think one of the things that you will say, I'd say like previously was really good. You talked about verticalization a bit. Like being vertically integrated tended to lead to layer ones dominating. I mean, first that comes to mind was thinking of like Avalanche back in, what was that, like 2018, 2017, sometime around then. I can't, the dates are fuzzy, but overall, owning that entire stack was, it seemed like it worked out well previously. I don't think people will continue to spam it, but given Stripe's unique positioning, I mean, they'll probably do well. The question is, how do they invite the degen and more on-chain, like crypto native culture? Because those are the people who stick around even in a bear market. And you'll see stablecoin volumes go down naturally as things ebb and flow. But just culture seems to be dominant this cycle in my mind. So if they don't do that well, it's going to be tough for me to imagine a future for the chain, just currently from my perspective.
Tim, hot takes?
Yeah, I guess the trend of stablecoin chains or stable chains, as I've started calling them, is surprising to me. I think because most things in crypto come out of people trying to make money. And I guess the difference here is like normally it's retail people trying to make money or people trying to make money by fleecing retail. But in this case, it's sort of like stable coins are a genuine just business model, which they generate a huge amount of revenue through the treasury yield. And just companies are making so much money out of this that everyone wants a piece of that pie. Everyone wants to, take Tether's revenues. But then you're sort of realizing that what if the treasury yields go down, the sort of free money disappears. So then they have to capture the payment flow. They need to do fees for every stablecoin transaction. And you can't really do that in Ethereum. You can't really, maybe it's possible, but typically it's a lot easier to capture the flows if you sort of control the infrastructure. And I think it works really, really well for them. I mean, like you see Coinbase making a huge amount of money with Base because they control that infrastructure and they make money out of everyone using that chain. In this case, if they get everyone doing all of their stablecoin payments on a stable chain, and then they make money out of every transaction, they can make an absolute fortune. So I think there's a huge amount of money to be made for the companies doing this. And if it works, it'll be incredibly profitable. The question is, will people care about that, or will they care about just sort of what works for them in terms of like, if I'm on Ethereum and I want to swap and use a stable coin, do I need to go to another blockchain, swap there and make my stable coin transactions there and then come back? Maybe that's not the purpose, and if you're not going to do that, then purely, if it's just purely the sort of, infrastructure for sort of your sort of Web 2 payments, that's fine, but it won't capture a huge amount of crypto per se. So yeah, I guess it's sort of, I see it as quite different from a lot of things that have come before. It's far more sort of company focused as opposed to sort of like retail people trying to make money on speculative assets. So like, if it works, it's more likely to produce a sustainable business model that'll make a lot of money for these one or two companies. And I guess it'll be a first, or I think it's quite a new thing in crypto to see that, as opposed to people building sort of retail heavy prediction markets or gambling or trading services.
Yeah, I think it all just comes down to the use case, right? Like the person who is using Stripe doesn't necessarily have to be like a retail. That like retail Venn diagram with like your Stripe user is probably like a pretty thin sliver of overlap. And even if Stripe just were to move all of their existing payments volume on chain, I think that would be a massive catalyst. And I think that playbook has been written. You can look at something like Hyperliquid, which took a very like verticalized approach. They decided that they wanted to prioritize certain market participants in terms of like market makers by having canceled orders like move first, and by providing a I'd say like opinionated structure for one end user. It ended up being like pretty successful, especially once they obviously tapped into the more quote unquote like degen user base. So I very much see it as like a distribution first approach, and as long as you have distribution, like you can verticalize your own chain. That's really just what it comes down to.
Yeah, I think it's quite interesting the comparisons to Telegram, because you've got a sort of a blockchain associated with the specific app that has a huge number of users, and they've achieved a pretty big market cap purely based on that. So I feel like it's quite an interesting parallel if they can do the same thing. I think it's a little bit different with Stripe. Like Telegram, you have this sort of app that people are logging into daily that you can they've created these mini apps, they've got people playing these games, they've got a native wallet, it's all, you can see how there's a community building there and apps being built there. The question is, can they do sort of the same within Stripe, maybe? But yeah, I think the parallel is really interesting.
Yeah. Oh, well said. I think actually, since Hyperliquid was brought up, it's a good segue into the USDH bidding war and circle competition. So there's a number of proposals that came out, I guess, late last week into last weekend, really, into this week, around USDH would be a native stablecoin on Hyperliquid. And yeah, just curious, Mason, what you're able to look into, what your thoughts are, and we can kind of just have an open discussion from there.
Yeah, I mean, I think it makes a ton of sense for Hyperliquid to roll their own stablecoin, and a lot of the proposals, that have been submitted by the likes of Paxos, Agora, Frax, mostly come down to providing a white labeled service for USDH and Hyperliquid stablecoin, and all of them are offering to pay back a large percentage. I think most of them are like 95 to 100% of the interest revenue. And so when you think about it from Hyperliquid's perspective, that is obviously like another massive revenue line that they can generate. You can kind of, it's kind of, if you think of like Coinbase and Circle, and Coinbase getting 50% of USDC revenue, like Hyperliquid is just getting 100%, and so it's very smart of them. I think it also makes a ton of sense for the people who are submitting bids, because at the end of the day, like, their goal is to grow stablecoin supply, and so I think it's interesting to see the bidding war happen in public with all the competitors talking about why their product is better, why their products are worse. I would say, you don't really get to see behind the curtain for these types of bake-offs and partnerships. So I don't know, it's been pretty funny. And I have to give it to Athena. They had probably one of the best tweets here. I'll drop it in the chat.
The Eminem one.
Yeah.
Oh, that was hilarious.
So I mean, that was an 11 out of 10. Whoever put that out there. Kudos.
How does it compare to Jeremy Allaire's tweet?
Let me pull up Jeremy's, because
oh, you don't believe the hyper. Yeah.
Oh. That's pretty solid too. But I don't know. I gotta give it to Eminem.
Oh yeah, the intern at Athena is definitely crushing it. So one of the things I actually was kind of curious about through the whole discussion piece, I guess, is the future of finance just a bunch of crypto bros arguing on Discord? It's insane that something valued so high is just like it's being duked out in like this very crypto native channel. Curious if you thought.
I mean, it's great to see, right? Like, it's nice when you have more permissionless networks and people competing in public. I think it's like generally good. It allows an ecosystem to weigh in. Hyperliquid obviously has like a ton of people who are incentivized for Hype the asset and Hyperliquid as a protocol to do well. And so, I think it only is advantageous to create this like bidding war and have the community involved to the extent that they can provide valuable feedback.
Yeah, well said. I guess moving on. One of the things that I found really, really cool via your blog was the DeFi RWA flywheel. And one of the things that was like a very, very hot meta while we were like researching, prepping last week was the tokenized Pokemon cards as real world assets. So what role do projects like Cards play in your DeFi RWA flywheel thesis?
Yeah, I would maybe like zoom out and take one step back. And as we think of like RWAs and like tokenization more broadly, I think what we're seeing is markets for everything being created. And we're in this really unique opportunity where we can create canonical markets for a lot of assets on chain. And so if you take something like Pokemon cards, those have obviously existed for decades. It's one of, the most valuable like IP brands that exist. But the market for that has been like a really like opaque secondary trading market. And so what people are now doing is, basically just putting the Pokemon card into a vault. They create a tokenized representation of it. And then what that allows the marketplace and consumer to do is trade that card more freely. So one of the like big unlocks that a lot of these platforms like Courtyard or Collector Crypt or Phygital have is that they can recycle or sell that asset multiple times over than you typically would have otherwise, because you don't have to do physical receivership of the asset. If you look at, Pokemon cards as kind of this like initial wedge, I think there's been a lot of companies, started over the past few years that are trying to do this for other assets, whether it's luxury goods like watches. Obviously we see a broader set of like tokenized financial assets in the broader like RWA space. But ultimately, I think that because these markets are more efficient, we will see the assets, tokenized that can be tokenized. I think generally speaking, the ones on the collector assets that makes most sense is the ones where not having physical possession over it is super helpful. So like, yes, you want to maybe own your Pokemon card, but you're not always like showcasing that or like sharing it to other people. Something like a watch is maybe something that you would want to wear more. And so, maybe I'll be curious to see like how that market takes off versus others. There's other people who are other companies who are doing this for spirits and alcohol, like Baxis and whiskey. And I think that makes a ton of sense, because if you think about it, like, yeah, you have your wine or whiskey collection, but there's actually value into someone else like storing that asset for you. So I think we're only going to continue to see more and more assets tokenized such that there can be like a physical representation of them. The other thing that I think is really interesting, depending on how familiar you are with companies like Courtyard or Collector Crypt, is that the majority of volume typically comes from this lottery-like mechanism where users can choose to buy an individual pack, and then they can immediately resell it for anywhere from like 80 to 90% of the value. And so what that kind of does is create a like new digital like slot machine, where people can decide like can effectively like try to go for a rare card, or if they're trying to go for like a specific card to complete a set, like this allows them to like turn over and sell that card much faster. And so that's been like a core driver, and I think that there's other ways to bring that mechanic to these other types of collectible assets outside of Pokemon cards.
Yeah, looking at the dashboard you shared earlier, Collector Crypt has done $156 million of volume. So that's pretty crazy to me. But like, I mean, most Pokemon cards are a lot. Sorry, is someone chopping wood? Like,
sorry, my dog is going after a cardboard box. One
nice.
sec.
Yeah, I was just saying like $156 million of volumes is pretty absurd for Pokemon cards. I mean, Kelvin, I don't know if you're much of a trader of Pokemon cards, but surely the average value is like what, a couple $100 for a pack? I don't know. I'm not.
I'm sidelined on this one, man. This was I tend to be crypto native with my degenerate activities, so it was interesting to see it take shape, though. I mean, one of the things that I was curious about was like, okay, well, it seems like eventually, as this gets more liquid, you're gonna have like probably just like the spreads that they're able to like basically their business is gonna spreads are going to tighten. They're not going to be able to make as much money. So I was thinking, okay, well, how does this go into sports and other fan memorabilia type of cult like illiquid assets? So I wasn't as interested in Pokemon cards, to be real with you. I was like, all right, now do NFTs next, guys, please. But we'll see. The meta is still hopefully early on.
Yeah, I mean, I think companies like Courtyard have been around for a bit, and if you kind of look at some of the dashboards, their volume's been pretty significant. I think what has kind of like changed in the meta is that Collector Crypt launched their token cards, and I think anytime you have a token, that brings eyeballs and attention to a trend. So I think that's been a catalyst for people getting excited about this once again.
Yeah, absolutely. So one of the things that I guess moving on to a different subject was launch pads. And one of the things that I thought was really cool in your coverage of consumer DeFi via your blog was like the role of launch pads. So I kind of curious, like, what do you think the role of launchpad infra is now in ecosystem development?
I think this kind of gets back to the markets for everything. If you look more broadly at the market, something like Hyperliquid has commodified exchange infrastructure with HIP-3. Like they're going to enable anyone to launch a kind of a perp stack. If you look at a lot of the newer launch pads, things like Zora, like they're built on top of protocols like Doppler, which again enable anyone to create a launch pad. And so I think this commodification of exchange as a service does two things. One, it allows anyone to easily port over this type of infrastructure to your ecosystem, which Tim and Kelvin, to your earlier points, is important for bootstrapping kind of that financial markets activity. I think the other thing that these launchpads like play a role in is really increasing the or simplifying the liquidity that it takes to bootstrap any new market. And so if you think of like what Pump's really like initial innovation was in their bonding curve, it was making it one click easy to deploy a token and having liquidity on a bonding curve such that anyone could trade it. You didn't have to like initialize like a Uniswap pool, which took some like initial startup capital as well as some like know-how. And so like we've just gotten to this point where spinning up a new market is easier than ever, and I think that is accretive to any new ecosystem, and should obviously be something that they're focused on, because again, most of the applications around blockchains are payments and financial activity.
Yeah. I guess one thing I'm curious about how this changed overall market dynamics was it seemed like at least earlier days, previous cycles in crypto, people got in for these massive TAMs that had insane upside volatility. Now the idea is now that this is being commoditized, anyone can launch a token. It's super easy. Really, it seems like you experience like this altcoin overproduction. However, you don't have people saying that there's too many YouTube videos that have ever been created, but for crypto, it seems like everybody's complaining about there's not that same volatility, there's not as many coins. So is that like always going to be the case? Is there, I mean, there's obviously going to be some kind of dynamic equilibrium, but how do you kind of figure that out as an ecosystem? Is there even an answer to that?
Is the question like, are we going to have the same level of creation as like YouTube videos?
Yes, that's probably where I should put it. Yeah.
Yeah, I mean, I think the answer is like it'll get closer. There's a lower, I think, stakes to creating any type of content than there is to like a token. That said, I think if you look at some of the like recent dashboards, like there's tens of thousands of tokens being created a day. And I think that will only increase, especially as we start to tokenize more things. So like something Zora does is they tokenize every piece of content. They tokenize the actual like creator profile. And I think there's, putting aside like what type, like whether we should tokenize content or where does that eventually land? I think there's going to be a ton of experimentation, and ultimately, there's going to be business models that work, and that those business models I'm sure will lead to higher levels of token creation. So yeah, I think there's going to be many more tokens. It would be like the TLDR.
Understood.
I just ran the numbers, and I believe we're at 12 million Pump.Fun tokens created and 20 billion YouTube videos uploaded, which means I think we're at 0.06% of the way there.
Yeah, I mean, and but you also have to think like Pump has been around for what, a few years now. Give those types of platforms a decade, and we'll see how many tokens we get to.
Yeah, it was crazy. I mean, I think when I joined crypto, there was like 15,000 tokens created in total since inception. Now there's like 15K a day. Crazy to think about. But on the topic of Pump Fun, it was interesting seeing that core business model get commoditized. A bunch of other people launched their launchpad platforms. But with that, it seemed like I saw a tweet from Elon recently about Pump Fund really like doubling down on streaming. So curious, Mason, like what your thoughts are on the pivot, maybe even some SocialFi takes if you had any.
Yeah, I mean, I think this gets back to you want to own distribution and discovery. When I think of why certain financial applications do well, it's because they can typically own one of those two things. And a lot of times they're related. If you think of how people find a token or an asset to buy today, it's typically, oh, I log on to Twitter and see something trending, and then I go to the exchange, to buy it. Maybe more, degens are going to Dex Screener and they see something trending, and then they go to an exchange to buy it. I think what Pump is trying to do with the live stream application is just like verticalize those two things. So if you can create a flywheel between streamers who drive attention and volumes to your underlying set of tokens, as well as get those streamers to launch tokens that are on your platform and native to your launchpad, then that creates a really interesting flywheel that builds a little more, I'd say, like product defensibility into the Launchpad product. Obviously, we've seen a variety of competitors kind of come to market with different relative levels of success. So yeah, I think it's a really smart move by them. I think it's a really challenging problem to do. Overtaking like Twitch or other live streaming platforms is difficult, but if they can do it, then the upside is pretty massive. I'd be curious on y'all's take. You obviously spend your days thinking about media and content.
Yeah, I mean, I don't know if I call it a pivot. I'd say this has always been their plan. I mean, they did live streaming, what was it, a year ago, maybe more, and it just got completely out of hand, and obviously they had to bring it down. But I mean, they kept it up for a while before taking it down, showing how much like it's a priority for them. They want to make it work until they realize like it was absolutely untenable at the time. I assume they put in better practices now, but I think this is always the play for them. I think they want to be a popular SocialFi app, and I do think, while obviously it would be super hard to take on Twitch, like if you just set up a streaming platform, like it'd be impossible. But setting one up with native like crypto functionality, the ability to instantly buy a token for a video that you're watching, it's such a step forward that I think, they got a shot.
Yeah, I mean, I think ultimately matters is can you help creators make more money? And if the answer is yes, then that platform will continue to see more experimentation and more adoption. Obviously, the monetization has to be like more recurring and it has to be like sticky. It can't just be like a streamer rugging like their audience on a single asset, or a single like token. But I think it's a really interesting market mechanism. And Tim, to your point, I think this is a product they've had for a year. I think they've finally started to put a lot more incentives and like creator rewards to it, which is probably why in part we're seeing it take off again.
Yeah, I guess one of the points that you guys actually really didn't touch on was the cash on hand that Pump has. That's something I pay great attention to, just because think about the social media game, or at least SocialFi, whatnot. The biggest issue last cycle was that the companies didn't necessarily have the capital to compete with platforms like Meta or Instagram. I mean, TikTok was red hot for the, I'd say like the medium to long term of what it would take to run these media style businesses. But Pump has that. They have the culture and they have the cash. So I think that they have as good a chance as anybody. And this was probably the most successful crypto app since Uniswap. And it seems like this is, yes, it is very like crypto native, but I have people who know nothing about crypto being like, yeah, I just love it. I started messing with these coins and the volatility is exciting. I think Pump Fund taps into something deeply like emotional within people that makes the product really attractive and sticky at the end of the day. So I'm just kind of closely monitoring it, and I got my bags packed, full disclosure.
Yeah, not to disagree too much on that one, but I don't know if that was the issue with SocialFi. Like for me, everything was centered on friend tech. Like there were other apps doing cooler innovation, but everyone only really cared about what was happening on Friendtech, and I feel like Friendtech just dropped the ball. Like, I mean, they were backed by, maybe not fully, maybe not endorsed, but they were backed by Paradigm. They had the money. They made a huge amount of money from everyone using the platform. Like, they got, if you think how much money creators got paid, they got paid the same amount, but for every creator, right? They made a filthy amount of money. And then I felt like when they did that airdrop, it felt like they'd spent like a year building out something that looked barely even thought through. Like maybe they had like one developer or something. I got that impression. I just feel like, and then it sort of rugged, right? It just disappeared. So I feel like if they'd actually built out an entire team, which I think Pump.Fun is doing a lot better, and if they actually cared about the long term and delivering, I think it actually would have got a lot bigger. But you kind of need people as passionate as like the Pump.Fun founders to really like execute on something.
Yeah, I mean, I think the Pump team is obviously executed well. I think it's, I would diagnose a different issue in terms of like the business model of how Friendtech was set up. And so if you think of like Friendtech's model, like you bought a key and like you got access to a group chat, and the only way for the creator to make money was people buying and selling out of their keys. And so there's like a clear disincentive because a creator has an incentive for people to like buy in and trade the keys as much as possible. But the utility value connected to being in a group chat is like, it requires you holding the key. And so like those two things were like kind of at odds. I think the business model that like Pump has like moved towards where, you're like, in essence, it's kind of like leveraged entertainment, right? You have this like token that's connected to the stream or maybe this like individual. And I think that business model is a little more sound. And so I think that like the right business model here is really important and is often like a core factor in whether these types of platforms succeed or not.
Yeah, I do think the business model was unsustainable, but I do think to that point, surely with creators, they make money by more and more people buying their keys. So if you sort of become a bigger profile creator, if you put out better content, if you convince more people to want to join your group, then you do make more money out of that. So there is like a kind of incentive there if you can grow your brand. Obviously, some people you sort of reach your limit maybe quite quickly. But I do think that, yeah, there was some sort of incentive for growth. But yeah, ultimately the sort of 5% fees and the tokenomics was a bit Ponzi-nomics, but there were some incentives there.
Understood. Yeah, I guess a bit of a segue here. I kind of want to talk to the platformization of DeFi. You had a lot of really cool charts and whatnot, and really wanted to break down what this thesis is and why does it matter now?
When I think about a lot of the DeFi platforms that exist today, whether it's something like a Morpho or a Uniswap, like they're moving towards a very similar platform-like architecture. And so what these in practice look like is they have some type of single liquidity pool that can be accessed, whether for their in Uniswap their DEX in their case, or the lending platform in Morphos, and then on top of that liquidity layer, they have a more modular application layer. Uniswap v4 has a hook architecture, which allows for a lot more programmability in terms of accessing that liquidity. Morpho, has a similar structure with kind of their curator, their curator structure and product. And so what I think this platform moment is it's going away from, app on Uniswap that like connects to liquidity and creates a way for many more third parties to build on top of these platforms. And if you look at like platforms historically, that is where the true value gets unlocked, because you can create this multiple marketplace of larger participants, which obviously like spins the flywheel of more users, more liquidity, more developers. And so this platform moment, I think, is really key to just seeing continued growth of DeFi. And as you look at more and more of these, large DeFi protocols and companies, I think they're increasingly taking this approach. Like you could even argue that Hyperliquid is taking this approach by having its liquidity and then allowing anyone to create markets on top of its infrastructure via HIP-3. And so, yeah, I think this is really just like a maturation of the broader like DeFi space.
Yeah, you mentioned Uniswap hooks. Like I remember covering this when I was back in the editorial team, but I wondered, like, has there been much uptake there? Like, are there a lot of products using them? Do they find sort of success or not?
I think that there's been some success to date. I mean, it all just depends on like what application you're talking about. For example, if you look at Zora, a lot of that success has been derived from Doppler, which is how they launch all their tokens and create it. That is built on top of Uniswap v4 using the hook architecture. There's other trading focused type hooks. I think some of those haven't taken off as much just because we've seen a lot of trading on perps platforms like Hyperliquid, and so just as the trading space has gotten more competitive, I think that's been more challenging. What I think is going to be an interesting opportunity to see like how hooks evolve is how Uniswap really manages their own chain, and I think there's a lot of opportunity, obviously, when you again talk about this verticalization and how do you connect activity from your application to your chain, and that is like in essence what kind of Coinbase has done. I think it'll be interesting to see how that evolves.
Well said. I guess we have time for one more question. I guess quick topic rather. One of the things that I really like that you're pretty vocal about on Twitter is sports books and predictions markets. So it's a spicy take. I don't want to steal your thunder, but can you just speak to those two buzzwords?
Yeah, for sure. I mean, I think that prediction markets have obviously gotten much more popular, with the rise of Polymarket and Kalshi. I think they've clearly started to move into sports betting. Now, I think that there's a lot of reasons that you'd want to trade or sports bet on a prediction market, in particular because you typically have lower fees. These are typically like peer-to-peer models, and so that creates just a better dynamic for the individuals because you're not actively trading against Vegas or a sports book. Now, where I think prediction markets are starting is on your more binary money line type bets, where those markets can be very liquid because it's this team wins, that team doesn't. I think where prediction markets haven't yet gotten to is the ability to price risk for things like parlays. Parlays are one of the most traded sports betting products, and there's a lot of risk and design around those, and so it's going to take a bit. I think it's unclear whether prediction markets can be better for parlays. I think the way I see a lot of these worlds merging is that a lot of the prediction markets will spin up their own parlays up until such point that they can potentially move that type of infrastructure onto their market itself. Broadly speaking, I think this has been super successful for companies like Robinhood, which use prediction markets like Kalshi under the hood to offer their sports betting. And I think you'll only continue to see this amongst other exchanges, whether those are crypto exchanges or more traditional brokerages like Robinhood.
Understood. And I guess one thing I'm kind of curious about, maybe even like culturally, if there's any type of emergent properties you see coming from this, but how does really the regulatory support and growing traction and demand really accelerate this trend? What does that acceleration look like?
Yeah, if you look at how some of these prediction markets or many like Kalshi are regulated, it's under the CFTC using a DCM license. That license gives the exchange, in this case Kalshi, broader access to sell those financial products to people like Robinhood. Sorry for the jumping note again. That makes it easier for these types of products to be licensed and distributed. And so I think the regulatory unlock has been key to the growth of these products.
Nice. Well Well, thank you, Mason. And I guess that's all the time we have today. I want to thank Mason for joining this episode. And as a reminder, our newsroom works tirelessly to get you accurate, informed crypto news. If you want to stay ahead, read The Block.